Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can better understand what we see in the global landscape. Just last week I was talking about small dips, 2 to 5% movements in all investment sectors, not just the stock market. And officially on Friday, we put what cash we did have to work back to work because we basically had one of our indicators that showed an oversold condition, basically started to rebound and bounce, so we are fully invested across the board in all Resney Wealth Management portfolios. At the end of the day, an investment strategy that includes risk management is going to be more important than ever. One of the things that I've stressed repeatedly throughout these updates is you can't worry about 2 and 5% movements in the value of any asset category on a short-term scenario. What our management is designed to do is not only grow our clients' portfolio, but provide them income on the long term. We don't worry about every 2 to 5% movement because even in a conservative portfolio, if you want to have a chance to make better than 1% sticking your money in a mattress or at a CD at the bank, you're going to have to accept some short-term volatility. At the end of the day, as I've repeatedly talked, the U.S. economy is getting a little bit better. Janet Yellen, our new president of the monetary policy for the U.S. economy, essentially took place yesterday, and she talked about what she feels she's going to do and how she's going to be accommodative and also follow the previous Fed's role in what their objectives were. What this means is I feel there is basically a safety chip per se that's kind of put on some of the, not only the U.S. economy, but the world economy, and especially some of the equity markets in the U.S. Now, while we continue to hold large, small, and mid-cap primarily in the U.S. because these have been relatively strong, as I made a comment earlier, we put our money, all of our money, any extra cash we had back to work because we had a confirmed buy signal again within on Friday. These are important steps. We like to buy in the strength. We want to sell into weakness, and ultimately investors have to realize an investment strategy is more crucial than ever. We continue to bring in new clients at Resney Wealth Management. In fact, one of the clients that hired us just last week, it was interesting. We talked to the couple, very nice people, of course. And one of the things, they were with a local bank that basically had their money spread out in about 40 different mutual funds. And one of the things that I talk about repeatedly is so many of these brokerage firms, the insurance agents, and these banks basically are asset gatherers. There's no really risk protection. There's no when to sell. It's basically spread the money all over, and it kind of resembles basically a big hodgepodge of different mutual funds, ETFs, or stocks. That's not an investment strategy. These are clearly firms that want to basically collect a fee for doing no more than spreading the money all over the plate. And all over the plate typically doesn't work not only in risk management, but it doesn't work in actually making you a return on your money. We see this a lot. So, of course, if you are not a client of Resney Wealth Management and you want to become a client, I would suggest you give our office a call and contact us and make an appointment. As for clients, rest assured, we're not overly concerned that the U.S. economy is going into recession. In fact, quite the contrary. We look at all of our indicators. In fact, we look at recessionary indicators that we look at when we're going to raise substantial amounts of cash for recessionary periods. As I repeatedly tried to educate investors is recessions happen about every 6 to 7 years, sometimes less, sometimes more. But recessions really hurt risk assets like, let's say, the equity market. Generally speaking, all of our indicators are pointing in a nice uptrend, meaning we're seeing slow improvements not only around the world, but of course in the U.S. economy. At the end of the day, as long as the economy improves, as long as corporations make more money and sell more products, I firmly believe we're going to see higher prices by year end. One of the things that has always been the case, and I want to stress this, is our government has always been dysfunctional. This isn't some new phenomenon. In fact, I did a talk yesterday, and I was trying to educate investors about our dysfunctioning government. If our government can get even a little less dysfunctional, I think we can grow our GDP in this country even better. But at the end of the day, we are growing quite well. In fact, we're looking well over a 3% GDP for this year in 2014. If corporate earnings expand, which we anticipate, if we get a little PE or our price to earnings multiple, I could easily see that we could easily be up between 8 and 15%. Chances are in some of the equity markets around the world. Now, that's not a guarantee, but I just look at purely the economics or the fundamentals of corporations. Corporations drive their businesses. Government doesn't control business. While government does a bad job with the overall governing and spending money in the U.S., corporations are their own boss. if our government can learn to be more like a corporation and actually be somewhat better decision makers, I think our economy could do much better. We're impressed with what we're seeing in relative strength in the sectors that we own. We continue to obviously not own intermediate, long-term, and even shorter-term type bond investments. We received 2 calls on my radio show, of course, on Sunday. Both of these individuals that called my radio show were concerned because their portfolios were down 8% last year because they owned all bond mutual funds and they thought bonds were safe. Again, we try to educate investors all the time that all assets, regardless if it's stocks, bonds, gold, real estate, everything's going to have short-term fluctuations. But if you're a bond investor, you own too many bonds and you keep listening to your brokerage house about hold on, things will come back, I think right now would be an appropriate time to start reducing your bond exposure. As I've always talked, all investments go up in a stair-step fashion and go down in a stair-step fashion. The bond market, as an example, has basically gone down about 4 or 5 or 6 steps. It's gone up 2 or 3 in the last about 3 weeks, and I anticipate the 10-year treasury to be somewhere between 3 and 3.5% by year end. So if you haven't listened to my advice or my radio or TV show and you overloaded the boat in bonds because your broker told you to, now would be a perfect time to start reducing your bond exposure because we're seeing a backup in rates again as we speak. Of course, if you're a client of Resney Wealth Management and you have a question about your portfolio, give me a call. Of course, if you're not a client of Resney Wealth Management, we always like taking on new clients who are nice people to do business with. Maybe it's time you called our office, made an appointment, and get that portfolio moving in the right direction. Make sure you have yourself a safe and profitable week. And of course, we have a live TV show tonight that will be uploaded on our website tomorrow morning by noon. So if you're not in the viewing area, you can watch that. And of course, we do have a live radio show this Sunday. Make sure you have yourself, again, a safe and profitable week.